Hello everyone, Joseph Hastreiter here again with EWH Small Business Accounting, again your trainer and facilitator for the Fundamentals of Financials workshops. Want to welcome you back. Now what we're going to be doing in this video is going over two more of these spreadsheets that you're going to find in your file. We're going to be going over the weekly goal sheet and the daily goal sheet. And again, the purpose of these two sheets, as we talked about in some of the earlier ones, is when we get our financial statement, we get our KPIs, things like our sales and our profits, we don't really know until the end of the month. So we want a way to help us monitor, for instance, like where our sales is going to end up throughout the month. So when the end of the month gets there, we kind of already know where things are going to be at. And the two primary things that drive that for your cousin's restaurant would be your average dollar purchase, right down here, and your average transactions. So these two spreadsheets we're about to go over, the weekly and the daily goal sheet, are going to cover both those things and give you a way of monitoring that. Now, if we just start with the daily goal sheet, because really the thing is, how do we, when we get into things, we really want to look at them on usually, if we can, on a daily basis. The less bad days you have, the less bad weeks, and then the less bad weeks, the less bad months, and the less bad months, the less bad years. I said that in a previous module, and again, the other way around. You're better, the more good days, the more good weeks, the more good weeks, the more good months, the more good months, the more good years. So the more we can break things down, which is one reason, like if we went back to our yearly and quarterly planning sheet, that was one reason even when we looked at if we wanted to increase the amount of transactions per day we had, really looking at it a daily basis, making it simple, and then just understanding if we just did 5 more transactions a year in this case, we'd have 18 more hundred for the year. So the more we can look at things daily, the better in this case. So we're just going to start with this spreadsheet, and again, notice the green cells are the ones you're going to input information into. And notice I've already filled in all this information in the green cells here. These other numbers you see on this sheet outside of the green cells automatically calculate themselves just by you inputting this information. Now, the nice thing about this spreadsheet is all you have to do, first off, just to walk you through it again, this is the goal sheet for the average purchase. And also, it doesn't state this here right here, but also for the number of transactions per day. Battery on my computer is about to die. So let me just plug this in quickly. But again, you're going to see that on the top. Notice we're going to have the day of the week. This space is left here. So if if this is a Monday, you can put that there. Tuesday, Wednesday. I know I have reports that I look at to monitor certain things with our company, and I like to be able to, when I go and look at it, know what day of the week it is. But obviously then you have the dates of the month. You have 1, 2, 3, and notice I can't even select this. That's just there because you're locked out of the cells again. But you can input the days here. And then down here is where you'd input your sales for the day. So you go to your POS at the end of the day, you look at, where did your sales fall. Obviously on day 1 it was 1,500, day 2, 1,300. We go down to day 15 right over here, we see it was 1,500. On day 31 it was 1,500. So we input that information there. This then says daily total rev, that stands for daily total rev, daily total revenue. So then it just sums that up to know that's there. This, by the way, the daily revenue handwritten, this might be a thing if for some reason you had a manager that was in the store, you weren't in the store, you can print this sheet, and if they didn't have Excel handy, they could keep this sheet throughout the month and then handwrite this stuff in. They could even then figure out, the average purchase a day. You can see there's a space for that being handwritten in, and then they could handwrite that stuff in, and that eventually when they gave that sheet to you, you could just input the numbers in here, and then these numbers would calculate automatically. So just another tool in case for some reason they didn't have Excel handy and they could still track this information daily and put it somewhere that was organized to make it easier for you to input later. So again, they could handwrite it in there. If it was printed. So then this is the next thing you input after you input total revenue. The only other thing you input into the sheet is the amount of transactions you had for the day. So on day 1 you had 150 transactions, day 2 160. Again, we go to day 15. Over here you had 150. On day 31 there was 150 there too. So then what happens is, see transactions for a week. This, like 1065 is, this 1060 right here, is adding all the transactions that took place that week to get to what were the total transactions for the week. This is doing the same thing for this week, for week 2. This is doing this for week 3. This is doing this for week 4. And then the last 3 days, notice there's nothing there. Because when we go to our weekly goal sheet, which I'll do for a second, notice we have weeks 1, 2, 3, and 4. Now, obviously, the month isn't perfect. It has a couple extra days. And we kind of just left it like that because kind of consider those last 3 days your buffer days, or maybe a margin for error, or your extra cushion, or the days you can just push it over the top if things are going really well. So kind of look at it that way. Then what happens though on this sheet is we have total daily revenue, total transactions, and then right here it's going to tell us our average purchase for the day. So we can see on day 1 our average purchase was 10. We can see on day 2 we didn't do as well. We fell to an average purchase of 813. If you go over to day 14, you can see our average purchase was 625. Really fell that day. If we go to day 31, we can see it was $10, right, where I know Cousin's goal is, right? So $10 average purchase for the day. Then down here, notice that what this is right here says moving daily average purchase. So this tells us after 1 day our average purchase was $10. On day 2, what this tells us, the $9.06, it says after day 1 and day 2 our average purchase is now $9.06. So this tells us what our average purchase is as we move throughout the month. So again, after day 3 our average purchase after these 3 days is $8.98. So we can see after 3 days it's fallen from 10 to $8.93. However, we can see on day 4, our average purchase was $10.80, and then our average purchase went back up to $9.43. And then you can see on day 5, we had an average purchase of $12.40. Then our average purchase went to 10 again, went up again. And then again on day 6, we had an average purchase of $11.30, and again that helped push our average up to $10.20. So at the end of the week 6, and this will be fixed when you get this, it's just a formatting thing with Excel, it's just putting in 4 decimals instead of 2. But you can see here, after 1 week, our average purchase was $10.16 if we round that down. So then what happens here is that this tells us where our average purchase is after this 1 week. So again, notice, since this is our moving average throughout the week, that's what this cell equals here. So notice after week 2, again, our average purchase is $9.91, again, $9.92, which is right here. After 3 weeks, it's $10.08, which we can also see right there. And then we have $10.07, which we also can see right there. Now, the other thing is, that's this spreadsheet. So again, all you do is input the revenue and transactions per day, and it helps you monitor where your average purchase throughout the month is at. Then what happens is these cells are red, and also like this, because these numbers then, in red, are automatically carried over, because this is what happened during those weeks 1 through 4. These numbers are automatically then carried over to the weekly goal tab, which we have down here. So you click here, and then notice up here where you see these red cells, this stuff is being pulled from our daily goal sheet. So again, we had week 1, 1,060 transactions, week 2, 1,065. So if we just go over to our daily goal sheet, we can see, again, week 1, 1,060, week 2, 1,065, week 3, 1,045. Right, see week 3, 1,045, so we go back to our weekly goal sheet, 1,045. Week 4, 1,075. You can see that right here. So if we go to our daily goal sheet, we can see 1,075 for week 4. Okay. Now if we go to our average purchase, again 1,016, 992, weeks 1 and 2. We go back to our weekly goal sheet, then we go down here where the red tabs are. So it's color coordinated, so you can go to the color and instantly see where something's at. So again, 1,016 after week 1, 992 after week 2, and then weeks 3 and 4 are 1,008 and 1,007, which we can see right here. So if we also go to our daily goal sheet, we can see that 1,008 and 1,007. So we know all that pulled correctly, as it will, because it's automatically set to do that. So then what we're looking at now is that information's there. Now what's over here, again, the green cells is where you input information to. So if we're just going to assume we want our restaurant to do $500,000 for the year, and we have an average purchase of $10, which is going to be our goal, what this does up here then is automatically calculates the number of transactions you need for that month based on that average purchase and that sales volume that you want. And then what it does is based on a 4-week period, it tells you how many weekly transactions you need and then how many daily transactions you need. And again, we're going to keep our average purchase for weekly and daily at $10 because that's going to be our goal. And then also what this is going to tell us here is total revenue is based on that average dollar purchase and the number of transactions we need, how much our revenue per month is going to be. So in his case, $41,667, which after a year will equal this $500,000, which is what we wanted and inputted, which comes out to about weekly revenue of $10,417, and then daily revenue of about almost $1,500 at $1,488. Now another thing, just to kind of combine this spreadsheet with our yearly and quarterly planning sheet that's down here, if we go back to our yearly and quarterly planning sheet, I won't do this now right now, but what I'd recommend is if you wanted to, for instance, say get to your desired level of profitability, if we wanted, we put down here we wanted a profit of 40,000, so we have a profit of 40,000 here. So really, if you wanted to kind of combine this sheet with our weekly goal sheet over here, what you might want to do is we know if we need a sales volume of this 543,744, we would want to carry that number actually over to this sheet and go 543,744. I believe that was the number. We'll just double check. 543,774. Right, so we see that here, 543,774. We go over here, 543. Slightly, just there you go, 774. So we'd input that there, and then we'd know what our total revenue would need to be per month, and then our transactions would be up here, how many we need to do in order to hit that. So that would be one way to kind of combine this with our yearly or quarterly planning sheet to make sure that we're on track. Another way we could combine the yearly and quarterly planning sheet with our weekly goal sheet to help us make sure that we're staying on track is I could also take the average dollar purchase as $10.40 that we needed to hit our desired level of profitability, and also carry that over to our weekly goal sheet. And then I'd take this average dollar purchase to sell in green, I'd change that to $10.40. And then we'd also reset our goals over here to $10.40 each week. And we'd do that and that. But again, for the sake of this example, I'm just going to assume though that we're going to be doing things at 10. That's going to be our average purchase. But that would be another way for us to combine our yearly and quarterly planning sheet to make sure that we're helping us stay on track. And again, the same goes if we carried our sales number, this 543,774, over from our yearly and quarterly planning sheet. But for the sake of this example right now, I'm just going to keep this at 500,000 for this demonstration. So again, notice now with what I have up here in these green cells is this is where we'd input what our goal is for the week. Now, our goal will probably be dictated by what automatically calculates over here for weekly transactions, because notice this whole area up here is average transactions, one of our critical drivers. This whole area down here is our average dollar purchase. So what we're going to do here is just input our goal for every week. So again, we can input this number. So we have 1042 in right now. Probably it's going to be the same every week. You might want to adjust that if you think you can do better, but we're just going to do 1042 right now. Then notice over here, we have right now a goal of 959, but let's say we're going to raise that to 10, and we're going to put this at 10, and this is at 10, and this at 10. So we know our weekly goal. So then what this does here is we have our weekly goal here. These numbers automatically pull based on the results that are over there. And then what this does, this 1060, 1063, 1057, 1061, this then again is our moving average. So we know after week 1 our average was 1,060 transactions. After weeks 1 and 2, we know that our average number of transactions for those weeks combined were 163. After week 3, we know our average amount of transactions including weeks 1, 2, and 3 was 1057. After weeks 1, 2, 3, and 4, we know the average transactions we had during those weeks was 1061. Now, what this is down here where it says next week's average needs to be to get back to goal. Let's say, for instance, instead of you doing 1,060 transactions this week, you just did like 1,000, which was under your goal. What this would then tell you over here, right, in this thing, is how many transactions you need to do the next week to get back to hitting your average of 1,042 for both of those weeks. So you can see here in week 2 goal, the number is 1,024. So what that means is because you were actually the actual amount of transactions you had here was higher than your goal. If you would have done even less than your goal this week, after weeks 1 and 2, you would have still came to an average of 1,042. So again, notice actually in all these weeks we were higher than what our goal was. So again, notice then that the amount of transactions you're getting for the next week falls a little bit more, because since you have higher numbers for the prior 2 weeks, for you to remain that average, which is your goal of 142, it could be a little bit lower number. So it just tells you where you're at. So it's nice to know if for some reason you don't hit that number, what you need to do next week to kind of make it up. This is what we're really talking about, monitoring your numbers so you know where you're at the end of the month, so you can know if you have one bad week or one really good week, what your next week needs to look like in order for you to average what you want to average. So it kind of gives you some foresight. Then down here it just says week 1 over and under, week 2 over and under. So notice here we were 18 transactions over our goal for the week. Here we were 23 transactions over our goal week because we had 1,065. Our goal was 1,042. Here we were 3 transactions over, and week 4 we were 33 over. And then down here it's going to do the same thing, but it's for average purchase this time. So again, we start with week 1's goal was $10. The actual was $10.16, so we know down here we were 16 cents over our average purchase. Notice over here though, on week 2 our goal was $10, and our average purchase was only $9.92, so we were 8 cents short that week. The next 2 weeks were 8 cents over and 7 cents over. So we only had a challenge in week 2 where we didn't hit that goal. So also notice, then again here, we have the moving average. So after week 1, our average transaction was our average dollar purchase was $10.16. After weeks 1 and 2 though, that fell because we had a lower average purchase week 2, so now our average purchase was $10.04, but still above our average, our goal of $10 after the 2 weeks combined. So we know we were still okay. So again, this would tell us, this $9.84 would tell us if we still wanted to average a $10 average purchase, we need to do at least $9.84 to maintain that $10 average purchase. And because our average purchase was actually $9.92, which was still above that $9.84, we're still a little bit above $10. So we know we're in good shape. And again, these then are going to tell us again what our average purchase needs to be that week to maintain a goal of 10. So same thing as above. So again, this just allows you to monitor that and kind of know where you're at. So it's like, for instance, if you saw this falling this week, it might just be a thing, okay, what do we need to do? Is there anything we need to review with our staff? Maybe you've already trained them on certain ways to upsell. At the register, again, cheese curds instead of fries, or whatever it is, or the sandwich is a little higher profit margin, the point of purchase specials that you have going on, things like that. It also might be if you're short on transactions, is there anything you can do to increase that? Can you drop some free sandwiches off for some local businesses so that if they ever want lunch someday, they're thinking of you and they're going to order a bunch of sandwiches someday for lunch for their entire staff. So again, just some ideas though to get you thinking. So again, this just allows you to monitor things, to figure out ways that you can be more proactive. What can you do to be able to increase your transactions or keep them steady, or increase your average dollar purchase or keep it steady based on wherever you're at. And then also then backing into, what do you want your sales to be for the year? Then knowing what's your average purchase goal, and then based on that how many transactions you need, or if you have to adjust or play with those, where's everything going to fall. So again, just gives you a way of monitoring most things, and most of that then is inputted from our daily goal sheet. So this is going to be the main tool you're going to use to monitor things. So I hope you found this tutorial on how to use these helpful, and if you need any additional insight, I highly recommend you talk to your Cousins field trainers. They'll be glad to help you. Again, they've went through the workshop, they know how these spreadsheets work, and they'll be able to help you navigate and help you run your Cousins restaurant more successfully. And again, if you feel the need for some reason to reach out to me, you're welcome to do that as well. Again, 262-923-7845, or my email is jhastreiter. But again, highly recommend you talk to the Cousins field trainers first, and then if you need anything, we're obviously here for you as well. So thanks so much for watching this tutorial, and I hope you've watched some of the other ones, or moved on to the 8-week cash flow forecast, which is the next tutorial if you haven't already watched it. So have a great day.